Well, thank you. Well, I'd like to turn to Chairman Powell at this point and ask what you're doing in this respect, because you're currently in a very interesting position, Chairman Powell. On the one hand, you have some politicians in the US warning that if the US does not accelerate its activities in this area, you're going to see China and others create digital currencies, which could threaten the dollar. You're seeing people like Gary Cohn, formerly of the White House, warning that the US is lagging behind in financial innovation. And yet at the same time, you have a lot of the establishment looking with great nervousness about what's happening in Silicon Valley and saying we cannot let things like Bitcoin go completely spiral out of control. So how is the Fed trying to square the circle? And what exactly are you doing in Boston with MIT right now in relation to the CBDC discussions and developments?
Thank you, Jillian. Well, there's a lot in that question. There are several questions in that question, so let me try to go through this. First, I want to say, applaud really Augustine for making technology and innovation a central focus of his leadership of the BIS, including the Innovation Hub and the other things that he mentioned. I think that was a very wise and insightful direction, and I think it's already providing significant benefits. I would also say, as far as CBDCs are concerned, two things follow for me from the dollar status as the world's principal reserve currency. The first is that we have an obligation to be on the cutting edge of understanding the technological challenges as well as the potential costs and benefits of issuing a CBDC. And we are, as I'm happy to share with you, exploring all of this. We're not in a mode of trying to make a decision at this point. We are experimenting with technology, discussing policy, and all of the things that have been discussed by both Augustine and Jens. But the second thing is, because we're the world's principal reserve currency, we don't need to rush this project, and we don't need to be first to market. A dollar CBDC would have potentially large implications here and around the world, and we'll be sure to think carefully about all of that and engage very broadly with the public around the world, and particularly here in the United States, before we even approach a decision. So let me come to the United States and how we're actually thinking about this. So if I can just provide a little context. Today, the public can own central bank money in the form of currency, and financial institutions can own central bank money in the form of reserves, which are digital. Banks offer digital money in the form of bank deposits, and although they're obligations of commercial banks and not of the central bank or the government, they're backed by the federal deposit insurance up to $250,000, giving them characteristics of trusted money. So that's the world we're in. It's also a world in which there's tremendous innovation in the payments area. We're going to have ubiquitous instant payments very soon. People will be able to make a payment immediately in immediately available funds rather than waiting hours, days to clear. And these improvements are being driven by both private and public sector actors. So we want to foster that innovation, but we want to assure through regulation that the public is protected. So does the public want, the real threshold question for us is, does the public want or need a new digital form of central bank money to complement what is already a highly efficient, reliable, and innovative payments arena and system? What exactly is the need here? How can we address it? What are the costs and benefits of adding a CBDC to the mix at this time? So the potential benefits could be more efficient, more inclusive payment system, and consistent with our essential ongoing role as the issuer of the trusted currency, the sovereign anchor, which provides so much benefit, and I think we all agree on that. But there's significant risks as well. There's the cyber risk, there's money laundering and terrorist financing. In addition, the financial stability risks that Jens mentioned, we don't want to destabilize the two-tiered system. We're sort of purveyors of stability. Macroeconomic stability, price stability, financial stability. We have a two-tier system. Central banks interface with banks, banks interface with the public, and we do not want to destabilize that. And therefore, we don't want to compete with banks for funding. We also, in a time of severe stress, don't want to create the basis for a run. And so there's just a tremendous amount of thinking going on how we can capture the potential benefits while also managing those potential risks. And in the BIS work that we've done with other central banks, we identified three principles, the first of which is do no harm, the second of which is coexistence of a central bank digital currency with commercial bank money and cash, and the third of which is fostering innovation and efficiency. So Now you ask about what we're actually doing, and I'll wrap this up in a second. But what we're doing is a broad program of experimentation and investigation about whether to issue a CBDC, and if so, how would we resolve the many design choices to be made in light of those potential benefits and risks. So we're collaborating with other central banks at the BIS and elsewhere. We've also we've got at the board here what we call the Tech Lab. That's a multidisciplinary, it's a virtual group across more than half of the reserve banks have active work, way more than half on central bank digital currency. I won't try to name them because I'll leave somebody out. If I do that, that would be a mistake. Doing various things. You ask about Boston. So we're collaborating with MIT on a multi-year effort to build a hypothetical digital currency for central bank use. It's intended to support our broader efforts, obviously. So the focus really, though, is on developing an understanding of the capabilities and limitations of the relevant technologies. It's not an attempt to create a prototype. In effect, they're saying, let's try to build the basis for a central and see what we learn for a CBDC, and we'll see what we learn. Atlanta's very active. I won't mention, as I said, but ultimately the bottom line is to move forward on this, we would need buy-in from Congress, from the administration, from broad elements of the public. So when we haven't really begun the job of that public engagement. So you can expect us to move with great care and transparency in considering a CBDC, as is our obligation, and we're doing that now.
So just as a matter of curiosity, and I'd like to ask this question to Jens Wiedemann as well, one of the things that came out of the BIS's survey, which is fascinating, is it's not clear whether it's even legal in many jurisdictions. I think half of the central bank survey said they weren't sure. Is it legal to create this kind of thing at the moment in either the US or Europe? Chairman Powell and then Jens Wiedemann?
You know, we would... That's a good question, and we would not proceed with this without support from Congress. And I think that would ideally come in the form of an authorizing law, rather than us trying to interpret our law to enable this. So I think that's how we would look at it.
What about the situation in Europe? Is it legal in Europe?
I think by the time we will proceed with, or if we proceed with the central bank digital currency, you can be sure that the legal basis will be sound. And I think it's important to engage with the broad public also about the potential benefits and also side effects. And that's exactly what we've done during the consultation that we've conducted in Europe. And now after this phase, I think we need to engage also more with the legislative, but also explaining what a central bank digital currency can and cannot achieve. And again, my point from before is we shouldn't focus solely on central bank digital currency when we talk about modernizing the payment landscape. I mean, what we did, for instance, on our side here is to team up not only with our finance ministry, but also with representatives from the financial industry and the so-called real economy to explore what other avenues would be fruitful to investigate. And I mean, some of the beneficial effects of a CBDC could also be achieved, for instance, through tokenized commercial bank money. I mean, if we're talking about automated payment, programmable money, that must not or need not necessarily be a CBDC. And we're also here at the Bundesbank currently having a project that works on a so-called trigger solution. So we would have blockchain, private blockchain, that triggers payments in our Target 2 system in central bank money. And I think the main point, as Jay already mentioned, is that would preserve that two-tier system. At the moment, we distribute our central bank money to the commercial banks, basically, and don't engage directly with retail customers. And in that sense, with that trigger solution, we could preserve that two-tier system. And I think we should explore those solutions as well, which are less invasive in a sense and less disruptive than CBDC before we take that step to introduce CBDC.
So that way you avoid just intermediating the banks in a way that will create a new set of financial headaches. I guess one of the big questions, and I'd like to ask this maybe to Augustin and the others, is to what degree is this conversation about CBDCs or alternative token-based solutions, stable coins, to what degree is this really an attempt to fend off the unwelcome financial stability threats created by innovations like Bitcoin? Are you concerned about the financial stability implications of those, and is this an attempt to fend that off? Maybe Augustine, you can ask that, and then I'll like to ask that to Jay and to Jens.
Well, yes, certainly there is a financial stability risk there, a financial stability consideration there. There is also this element of having arbitrage between a very regulated, supervised system as the one that depends on the centrality of central banks, even if it's a two-tier system, in a system where, for example, no AML-CFT considerations are anticipated. No, other important aspects there is that in stable coins, I mean, for example, take the idea of stable coin. Stable coin says that they need to have backing to guarantee its value. So it needs to import value from from another type of asset. So how could that be superior to the original asset that is providing value? So there by itself, it's a weakness. And if you see through history, different manifestations of ideas similar to stable coins have failed, because at different points in time, the backing of those currencies have not been there at the appropriate moment. And of course, as both Jay and Jens have mentioned, central banks are there to provide stability. Therefore, we cannot support ideas that inherently have elements of instability there. And that's why, the name of stable coin, they have to put stable there, because otherwise it's not stable. And to get that stable there, they need to import it from some other place. So that for me is a very, very important drawback of those things. A good thing that the ideas have is that they have developed very nice technology there, and there are ideas there that should be rescued, and that's why I like to speak, and many of us like to speak about public-private partnerships, where we bring together what central banks can put on the table. Nobody else can do that. And at the same time, we need to be able to exploit the innovation, the drive of the private sector. And I think that's the way we can have a modern, top-notch payment systems with the most security.
So basically what you're saying is that you're trying to out-Libra, or take all the great ideas coming from Silicon Valley and transplant them into central banking, as I said, making central bankers cool. Jay, I'd like to ask you, Chairman Powell, I'm dealing with different forms of address and cultural expectations. I know in America, everyone uses titles. In Europe, they don't. So apologies if I cause offense to anyone watching by addressing you wrongly. But I'm curious, Chairman Powell, are you essentially trying to beat them at their own game? To what degree do you see things like Bitcoin or Libra representing financial stability threats that you're trying to get ahead of?
First, I spent 9 years here trying to get people to call me Jay, so please.
Okay, that's kind of being cool.
let me say, yeah, absolutely. Let me just take a step back and say that our work on CBDCs is not primarily motivated by the appearance on the scene of cryptocurrencies and stablecoins. It really is fundamentally, technology has made it possible for us to offer a new form of trusted money and that sovereign anchor that has been so important for economic development for a very long time. And we're looking carefully at whether to do that. So turning to your question, crypto assets, which we call them crypto assets, they're highly volatile, see Bitcoin, and therefore not really useful as a store of value, and they're not backed by anything. They're more of an asset for speculation. So they're also not particularly in use as a means of payment. It's more a speculative asset that's essentially a substitute for gold rather than for the dollar. And I think with crypto assets, the the public needs to understand the risks. The principal thing is there's the volatility. There's also the outsized energy requirement for mining, and the fact that they're not backed by anything, which I mentioned. Turning to stable coins, so to the extent a stable coin is backed by sovereign currencies of leading nations, that's certainly an improvement over crypto assets, I would say. But nonetheless, where does the credibility come from? It comes from that sovereign currency that is the backstop. The thing is, existing sovereign currencies are issued with the benefit of the public in mind. The potentially fast and wide adoption of a global stablecoin, potentially a global currency governed only by the incentives of a private company, is something that will deserve and will receive the highest level of regulatory expectations. And is regulation where it needs to be on global stablecoins yet? It's not, but we're making progress. Nonetheless, stablecoins may have a role to play with appropriate regulation, but that role will not be to form the basis of a new global monetary system. Private stablecoins are not going to be an appropriate substitute for a sound monetary system based in central bank money. And I'll stop there. Right.
Jens, how does it look from the perspective of the Eurozone? Because, of course, one of the things that I think is, particularly, sparked particular angst in Europe is the fact that so much of this innovation is coming out of the US or China rather than homegrown, which raises all kinds of issues about privacy concerns, because of course privacy expectations are very different in Europe. But I mean, are you concerned that this poses a kind of financial stability threats that you have to head off in terms of the swings of value of Bitcoin or things like that?
No, I think our perspective is pretty similar to that of Jay and Augustine. I think the main point here is, if you talk about the means of payment, and that was our focus so far, then stability is a precondition. I mean, you cannot have a useful means of payment or store of value if the underlying asset is widely fluctuating in value. And that's why, basically sometimes this discussion conveys the impression that Bitcoins are widely used to transform transactions. But that's not the case. I mean, it's mainly, as Jay said, a speculative asset. And I'm not sure when you effectuated your last payment in Bitcoins to purchase a newspaper around the corner or something on the internet, but I think most people will just say they didn't. And that's why the discussion now slowly shifts towards the stablecoins, because they are lending the stability from the legal tenders. And again, my point is, we have to look. I mean, we provide the stability to the system, but we can learn from those providers by looking at their technology and exploring whether this technology might make sense also in our environment.